Hello everyone, welcome back to the channel. Today we're taking a closer look at Iveda Solutions, ticker symbol IVDA, a small AI and smart city technology company listed on the Nasdaq. The stock has fallen significantly over the past year, but recent developments have attracted attention from investors looking for the next potential AI winner. So, is IVDA a hidden opportunity, or is it simply too risky? Let's find out. Iveda Solutions operates in artificial intelligence, smart city infrastructure, video analytics, surveillance systems, and Internet of Things technology. The company's products are designed to help governments, businesses, airports, shopping centers, and public safety organizations improve security and efficiency through AI-powered monitoring and automation. One of the biggest recent developments is the launch of the company's zero-shot AI detection technology. This new platform allows users to create custom AI detection models using simple prompts without extensive training data. As demand for AI solutions continues to grow worldwide, this technology could help Iveda attract new customers and strengthen its position in the market. Another important catalyst is the company's expansion into smart city solutions. Iveda recently introduced AI-powered traffic management technology that can help cities reduce congestion, improve traffic flow, and enhance public safety. The company is also expanding internationally, creating opportunities to win contracts in new markets. For a company with such a small market capitalization, even a few meaningful contracts could have a significant impact on revenue and investor sentiment. This is one reason some speculative investors continue to follow the stock closely. However, the financial picture remains mixed. The company is still not profitable and continues to report losses. Revenue growth has been inconsistent, and management still faces challenges in building a sustainable business model. While recent earnings showed some improvement compared to previous periods, investors are waiting for stronger evidence that the business can generate consistent growth and eventually achieve profitability. Another major concern is dilution. Like many small growth companies, Iveda has raised capital through public offerings and warrant issuances. While these actions provide funding for operations and expansion, they also increase the number of shares outstanding, reducing the ownership percentage of existing shareholders. Future dilution remains a risk that investors should monitor carefully. There is also Nasdaq compliance risk. Because the stock is traded below the required minimum share price, the company has faced compliance challenges. If the share price remains too low for an extended period, management could consider a reverse stock split to maintain its Nasdaq listing. From a technical analysis perspective, IVDA appears to have support in the 22 cents to 25 cents range. As long as the stock remains above this level, traders may continue looking for a recovery rally. The first major resistance level is around 50 cents. If the stock can break above that level with strong volume and positive news, momentum could potentially push shares towards 75 cents or even $1. Looking ahead, there are three possible scenarios. In the bearish case, revenue remains weak, losses continue, and additional dilution pressures the stock. Under that scenario, shares could move back toward recent lows. In the base case scenario, the company continues improving operations and wins additional customers. That could support a recovery toward the 50 cents to 75 cents range. In the bullish scenario, Iveda secures major smart city contracts, accelerates AI adoption, improves financial performance, and gains broader investor attention. Given the company's very small market cap, a strong positive catalyst could potentially push the stock above $1. Overall, IVDA is a high-risk, high-reward AI penny stock. The company operates in attractive industries and has recently launched new AI technologies that could support future growth. However, ongoing losses, dilution concerns, and Nasdaq compliance issues remain significant risks. For speculative investors willing to accept volatility, IVDA may be worth watching closely. For conservative investors, waiting for stronger financial performance and clearer evidence of sustainable growth may be the safer approach. Thank you for watching. If you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and turn on notifications for more stock market updates and AI stock analysis. See you in the next video.